Welcome to this training. In this video, we are going to discuss 4 serious traps you need to avoid as a beginner. Please take note of the word serious and traps. You must avoid them if you want to go far in your trading journey. So, what are these 4 traps? 1 is leverage. 2 is stop loss. 3 is high expectation. 4, EA or bot. EA stands for expert advisor or bot. These are the 4 major traps you need to avoid when starting forex trading as a beginner. What is leverage? What is leverage as discussed in the previous video? So I want you to check the previous video where I discussed the terms. However, let me just give you a brief or a reminder. This is the financial support or money borrowed to you by the broker. The leverage gives you ability to control large pool of funds with little investment. Yet, pause a bit and ask yourself, why should someone call you for no reason and say, come, let me give you a loan of $1,000, a loan of $100,000, a loan of $1 million? Why should that be? There is something behind. There is always an ulterior motive. If you have listened to me very well when I discussed leverage in the other video, you understand that it is a coy, it is a trap, as I said, that the broker gives you to come in and wipe your account. So you must learn how to use leverage. Totally avoid it or use the least of it. In fact, let me tell you, the brokers have devised a means of giving unlimited leverage, meaning that you can control as much as you can with your little investment. Then there is something fishy. It is too good to be true. So always be mindful of leverage. Stop loss. What is stop loss as discussed in previous video also? Now let me refresh. Stop loss is like is a device or is a means or a risk management factor built in the platform by the broker so that you will regulate the amount of loss you will have per trade. It is called stop loss, but I call it stop further loss because it only triggers when you have lose some percentage of money and you said, oh, I'm not ready to lose further. So stop loss. How do you use it? I personally don't use stop loss. Rather, I built my stop loss in my lot size. That you will learn when you come to Forex Trading Masterclass, which I said that is where you see me trading, or that's where you see some of my trading history, where you can see I have nothing to do with stop loss. So they give you stop loss as a trap, also telling you, oh, don't bother, don't bother. When you come, we cannot lose all your money. We have a device for you to protect your money. But is that the essence of business? You should not be going to business with the aim of defending losses. Rather, you'll be going with all out to win. You'll be going for all out to win. So, stop loss is a very powerful trap that you must avoid as a beginner. The third one is high expectation. Yes, this is very, very serious matter when it comes to forex trading. Yes, forex is like every other business. You can come with high expectation, but with reasonable approach of attending to it. The issue of money doubling, the issue of having 2000% return investment over a short period should completely be eliminated from your thinking. So you have nothing to do with there is having high expectation is not bad, but how do you have it? Now let me put it this way. I can take you the high expectation is okay, I want to make $100,000 with a $1,000 investment. Excuse me. That is the expectation. However, over 10 years, over 15 years, now you see it is reasonable that you can factor this little till you get to your point. What of telling me you want to make $1,000 or $100,000 with $1,000 in a week? Is that achievable? It could be achievable, but the risk is high. So to trade forex is not walk to the park to the park. It is a business. You have to start small, no matter the financial capability, no matter the strength you have. You have to start small while you grow. That is exactly how it works. That is exactly what you need to do as a beginner. High expectations of making millions of dollars in a very short while is delusional. Yes. So you don't come to forex market because you want to make so much money over a short period. It's delusional. You will obviously lose. Expert advisors. Yes. This science EA is expert advisors. It's a software automated trading tool used in forex trading, typically on platforms like MT4 and MT5. Now, as a beginner, avoid anything EA or bot. Anything automated trading does not work as a beginner. Money is not made on automation. Money cannot be made. Nobody will reveal to you a software that will give you. In fact, in my early stage, I bought a software for $3,000 while it was a scam. The seller built his platform, was using that software, creating profits, but it was a scam. So obviously, if you want to make if you want to make money in the market, you should obviously avoid expert advisor. Yes. So you have to avoid it. That is exactly what is in this particular area. Sure, it allows traders to automate their trading by using bot, but obviously avoid it as a beginner. Why must a beginner avoid it? You must avoid EA because it will not if you are trained to use EA from inception, it will be very difficult for you to understand any strategy or create your own personal strategy. It builds dependency. It doesn't work after all. However, if you want to start with it, it will reduce your learning strength. So with this is exactly what makes this course exceptional. Hardly will you see any course that have this warning clearly spelled out for you as a beginner. These four traps, make sure you avoid them and you will be on your way to making good money as a forex trader. Never miss any word in this course as you're on your way up to become a successful forex trader. Thank you for watching. Let's meet in the next video.